Hey everyone, me Kevin here. Do you know why most people fail to beat the market? Because they're paper handing sissies. They're not diamond handing. And I've got some proof here to show you why. If you follow a strategy like what Cathie Wood is doing in diamond handing over at ARK Invest, you're probably going to be much better off. First, before I show you what I'm about to show you, it's really useful to remember this. When a stock goes up in price, it is actually increasing risk. When you see, oh, it's up 10%, oh, it's up 10%, oh, it's up 10%, that is getting riskier and riskier and riskier. Every single move up is an increase in risk. It is not what we think it is. What we initially think when we see, oh, it's up 10% today. Well, oh, it's trending up. It might be a move upwards. It's momentum driven. Yay. We get this feeling that, oh, there's safety in momentum. There's safety in being in the middle of the sheep farm, right? Because you're in the middle. Like the dog's not going to eat you. The sheep herder is not going to come kill you. You're in the middle. It's like, let's just go this way. Oh, we're going this way this time. Okay, we're going that way. Like there's safety in that. So when we see green in the stock market, it's human nature for us to feel like, oh, well, things are getting better. Yeah, let's go over here where everybody's going. This is fun. Oh, we're going this way now. Great. When things are red, that is when there's pain in the market. Obviously, we've talked on this channel before about how, first of all, fight or flight sets in. We can't fight stock prices falling, so what happens? Flight sets in, because that's our only option. As humans, we don't like being backed up against the corner and continuously getting punched in the gut over and over and over again. It's like, just sell and make the pain stop, right? It's totally a human nature, an issue in psychology when it comes to investing, to want to sell when those times are happening. But what's actually happening is every punch to your gut is like, your portfolio just got less risky, less risky, less risky. And it's like, that doesn't jive. Like, you know, if they were handing you flowers, like here, your portfolio is less likely to decline even further every time the market was red. It'd be like, oh, okay. You know, especially if you have any kind of margin outstanding. It's like, oh gosh, I keep getting closer and closer to my margin call, right, to your margin calls if you have margin outstanding. And so psychologically, it feels like, oh crap, getting dangerous, more and more dangerous. It feels like things are getting more and more risky. But in reality, the pressure, the amount of pain that you need or the amount of energy that you need to get closer and closer to a margin or closer and closer to have a fall is harder and harder at every stage because you're really de-risking your portfolio. Here's just an extreme example. If Tesla today, just to make this simple, and then I'm going to show you some graphics here. If Tesla today was $1,500 a share, what's the capacity for that to go back, down 75%? Well, let's do that really quick. So let's say it's $1,500 today. Let's take 75% off. That would take Tesla down to $375. Well, I think a lot of people would look at Tesla historically, just over this last year here, even after the split, and say, well, there was a lot of support for Tesla between 375, 380, and maybe 420 in that range. And so I think if Tesla were $1,500 today, a lot of folks would say, yeah, I mean, sure, it could go to the last support level of 375. I mean, that's a long way to go, but it could happen. Now, if Tesla is, let's say, which it is, today it's at 550, what's the capacity for Tesla to go down 75% today? Well, 550 minus 75% today would bring it to $137. I think there are a lot of us that would say, probably not as much of a likelihood of that happening. It would take a lot more pain in the market to see that kind of collapse going from 550 to 137 than a run up to 1,500 and then a fall back to 375. That would be much more likely. My opinion, right? So in other words, again, my opinion here, and I know a lot of people think Tesla has a very high valuation, but let's just use Tesla as an example. In my opinion, Tesla goes up to 1,500. It's much more capable of falling to 375 than it is from 550 to 137. Not very likely, in my opinion, because anytime we fall, more and more people say, valuation in line, in my opinion, let's go buy it. At least the savvy investors are saying that. But what do most people do in the marketplace? Well, an easy example or an easy way to figure out what most people do is just go ahead and look at ARK Invest's fund flow. So here's how this works. Green lines mean money is flowing into ARK Invest. So right here on the left side at the beginning of this chart, $46 million flowed into ARK Invest, and that was somewhere around August of 2020. The red lines mean money is flowing out of ARK Invest. So people are withdrawing their money from the fund. So take a look at this. Notice this weird pattern we have at ARK Invest. So see this red arrow here? I put a red arrow anytime we had a substantial decline or in people investing in ARK Invest, or when people are withdrawing their money from ARK Invest. Arrow number 1 is right here at the beginning of September, which happens to be right after Tesla's split took place and we started having our September crash. So we started seeing money flow out of ARK Invest during the beginning of the September crash. Arrow number 2 shows us we had an outflow right around maybe day 10 in November, so around November 10th. Another large outflow right around here, number 3, the end of December. And then we've got the end of January, and then the end of February. This is where we're getting these outflows. So we really saw these outflows, again, just to remember, the beginning of September, about 10 days into November, end of December, January, and February. Okay, pretty easy. Well, take a look at this for a moment. This is Tesla's stock price. Tesla's stock price, beginning of September, goes down. Tesla's stock price around, a week to 10 days into November goes down. Tesla's stock price end of December goes down. Tesla's stock price end of January goes down. Tesla's stock price end of February goes down. At every single point, Tesla stock went down, people took their money out of ARK Invest. Even though Tesla is becoming less risky, society follows the sheep mentality of, oh my gosh, it's red, let's sell and get out. Now, in general, I mean, there are always going to be, those commenters that are like, oh, well, that's because you sell when it starts falling, and then once it gets to the bottom, you buy back in. Fine. Go make a YouTube channel and start publicly disclosing all your trades so we can see how you perfectly time the market. Fine. Okay? Do it. I would love to see it. And I want you to succeed. I really want you to succeed. But the point is, the massive amount of, or like the greater society that is investing into exchange-traded funds pulls money out of funds dramatically. I mean, look at this massive outflow we got at ARK over here at the end of February. We almost had $400 million flow out of ARK in one day. One freaking day, $400 million pulled out of ARK. And it always seems to line up exactly with when Tesla stock is going down. And this is literally people going, oh my gosh, the price is going down, let's take our money out, while the stock is de-risking. This is literally the time to be putting money in because the stock's de-risked. In fact, watch this. Let's reverse the analogy here for a second. Let's only buy ARK Invest when things are red. Well, obviously, this last segment, we're in red, so we can't really look at February yet because we haven't had the recovery yet. But let's look at the prior times. Let's say you bought ARK Invest around the end of the first week of September, somewhere around the first to second week of November, end of December, and end of January. Let's say you bought into ARK Invest at those points. Well, that means you would have bought into ARK Invest somewhere around the bottoms of Tesla's price here. And you would have averaged into the periods of time where Tesla ended up performing better afterwards. Again, like obviously our sell-off over here brings us back to a prior level. But the point is, if you did the opposite of what the masses did, you would have ended up still on a substantial ride upwards from November by buying at the low every time. So you could literally look at, as an example here, ARK Invest's fund, and just do the opposite of what the masses are doing and buying when people are selling out of ARK Invest by following or doing the opposite of fund flows. Now, again, we'll see. We obviously expect Tesla to go up again, and then we can update this, sort of breakdown here. But take a look at this. The other opposite thing that I did is I looked at some of the peak inflows, and I marked those in green here. So let's use the blue circle here, and this is about the first week in January and about the first day of March, where both of these were pretty green days. Like the first trading day in March, I'm pretty sure, whatever the first Monday was pretty dang green. The market actually opened up very, very optimistic. And what's ironic about that is in each of those examples, you would have ended up buying right at a particular peak before it sold off in the short term. Now, overall, my goal isn't to encourage people to try to time the market. But what's fascinating is if you look at Cathie Wood's ARK Invest outflows and inflows, people are dumping ARK Invest right when it's becoming the least risky. And people are plowing in when it's the most risky. Just to sort of nail this point, think about this. Look at where the biggest, thickest charts are. Are they in October or November where prices were relatively low compared to where they are now? No. The biggest inflows were after Cathie Wood's fund had, plus 5%, plus 5%, plus 5%, day after day after day after day in December and January. That's where the biggest inflows were. When euphoria was at all-time highs. Oh, can't lose money in the market, with the exception of those periods of time at the end of the month where, it fell. That's it, let's sell out. Following the trend, in my opinion, when it comes to investing, unless you're doing like momentum swing trades, but you have to be really deliberate about those, calculated and have a lot of research and information about those. You have to have more information in the market to really succeed on those, which is possible to do. Since the market can be incredibly inefficient, which does surprise a lot of people. You have to be really, really careful with investing when everything is green, what is everything in the market right now? Bloody red, which is a sign that, sure, can prices keep going down? Maybe. But remember what happens when prices go down. You are de-risking. All right, folks, thank you so much for watching. If you found this helpful, consider joining the group on the stocks and psychology of money via the link down below. Coupon code does expire in a week, and folks, we'll see you next time.